here we are, Amazon leader, 52-week high, 5-day breakout during the triple witch to all-time 52-week highs. What a great trade. And you can see here on a weekly level on this weekly chart, we'll be doing some work in our MMT platform. We are the things that we want to know about this bull trend, because it's a bull trend. And the bull trend is that the weekly have been rising, the 20-week has been rising as a standard thing. So high frequency volume machines, when they come down and hit these supports, like on top of that 10-week moving average, the support level of that 10-week moving average was 209.58. And in a 5-day period, we broke $30 higher in this breakout cycle. One of the things that we're going to be monitoring is when the people want to take profits. We'll be monitoring these high reversals over here where we had a nice shakedown. Oh, that was wonderful. So what we're going to be looking for moving forward, and calendar 2011 earnings October 23rd on Amazon, is that we have ran in anticipation for anything that was going to happen good in Amazon at this price level has already been more than priced in. Okay. But we do know that there are weekly reversals in Amazon. Here's one 5-week reversal. Here's another top. We put a bottom end, but they do have reversals. And what we're looking for in this particular high, just like this high, it had a reversal. It started on a daily right away, and look at that weekly reversal. Yeah. So, and then we have broken all-time highs. Now, outside of that chart, we're going to be looking at when we get on a daily or a 60-minute starting tomorrow morning is when Amazon starts. The higher it goes and the more overbought that it gets. It's at 70%. Okay. And it's a bull rally. It's a bull chart because everything is going in the right direction. The percent DS is going to get up here. When it does get up here, it does like to cross over. And when it does cross over, which it, like it did here, bam. And slightly in here, bam. And here we're still leveraging up. It will be in a trading range. Top in resistance, intraday will sell short. Now, let's get that out of there. Let's apply this. Here's a 240 put right here. You can clearly see that the call and the put side, I mean, this is the call side right here, 240 call, went from the lows here. But on the other hand, here's 5 days down in the puts to 1255. So let's do the math and let's do our work correctly. Here they were 610 and they peaked in the 5-day period as high as 1215. That means that this 240 call was a great buy down here on Amazon at 45 cents. Buying a couple hundred contracts knowing that Amazon likes to lever up. You could have made quite a bit of money. These are great opportunities here. And there will be times when the calls get too high, like they got inflated over here. They did, but they went from the high reversal here on the contract. This high was 820, and they took these down from 820 to 41 cents, where they could have been bought back in August. And we always look for these kind of deals. The thing about it is that the lows over here at 227, they have got into an inflated territory on a daily 240 call. And that's what it is. Let's take a look at the put side reading that is deflated. So I'm always a seller up here, and I'm always looking at the trend of Amazon. And let's take a look here. This is the put now. 240 put, same strike. But look at let's take a look at this is a weekly or daily movement all the way up here during a triple witch. But let's take a look at the highs here. The high of the put, yeah, 33.25. Where is it at now? It's down to $12. If Amazon wants to continue to break higher, these will go up a little bit more inflated, but this is the side of the market we're going to be focusing on, because these are going to get deflated and we're going to be buying over here, and we're going to be watching the daily 60-minute, 15-minute, 3-minute chart on Amazon individual as far as the day goes, because I can tell you that we have just gotten into the first deflated zone and the first inflated zone. Deflated zone, inflated. Okay? Granted that this weekly breakout is what it is, and this is the weekly chart, and it all happened in 5 days. So volatility goes down and volatility goes up in both directions. But how am I going to square my position and what side of the market pays and why? Here, MMTs, I will show you like I have showed you time and time, and I'm getting excited. I'm 95.11% overbought. I will not stay up here. I will not. And during that 5-day period, great breakout long. You had a breakout long and a double right breakout. But let me tell you something. You talk about being overbought, and if I'm that overbought on a daily, yeah, you can stay overbought for a few days, but you're coming down. And because I'm that overbought, then I'm looking at where my best trade is going to be on this side of the market. We can drop down and I get a couple dollars lower or a dollar lower. It doesn't matter. I'm in that deflated area on the put, and on the daily chart right here, I'm 95.11% DS overbought. That means that those intraday high-frequency robot machines that are in the tape are going to get onto that, and they're going to start taking it down, trying to print down the bid. And the 5-day natural buying has occurred here and made all-time highs. And it took these highs out right here, where it made its last lows. What a nice correction. So on a daily level tomorrow, we're looking for that correction. If it starts, then we'll start buying this. This was an Apple, I'm sorry, on a weekly. We'll start buying the put side of the market. Okay? So all the ingredients is there. Here's the 240 put. And once again, I'll go back to the 240 call. And that's the inflated call. That's the inflated call. And this here is a deflated put. And they expire on 10/22. Now I'm going to go over here to next week's expiration, and I'm going to look at the 9/23. This is a 9/23. It's a weekly. And what I'm going to watch here is I'm going to see that that this call was 565, and we'll monitor this one. It's a weekly, and there's the price action in the call or the put. So the put is at the bottom down here at 565. The high was $13 down in the weekly. So they took $8 premium out. We'll look at this one during this coming week, starting tomorrow, expiration. However, let's be due diligent. The same weekly call, you're going to love this. The low was 38 cents here, and the high is $5. And understanding how to do weekly movements, if I'm buying, when Amazon was ready to break out over here on its daily chart, and it came back and it tested, and we started to get these breakouts above these daily simple moving averages, I knew I could be buying down here on the weekly contract. And the weekly low was 38 cents. And this week here, this last week, they could have been bought at 74 cents even. And they went up to 528. You're buying 30 of these contracts for $2,200. You're cashing in big, because you're getting $15,000 yield on that trade in profits. That's the bottom line. So we're looking at the weekly inflated 240 call, and we're looking at the weekly $13 high down to the deflated weekly 565. Then we're passionately involved in the deflated 240 put for October and the inflated 240 call. And then this next week, we're going to be trading these overbought areas. The equity, again, on a daily percent DS level is reaching at 95. If it gets up to 97, wants to go a little bit higher, the upside in these last 5 day, and all of these 5-day breakouts here were in triple witching. Last week, triple witch, quadruple witch. 5 days down, 5 days up. Now we're going to put on our trade management.